when the dust settles, Detroit is going to win the EV race. Despite the enormous market capitalization of Tesla, the reported entrance of Apple into building production EVs for consumers, Detroit is still going to win the EV race. By Detroit, I am referring to what I call legacy car manufacturers, including the Japanese, German, and South Korean players, Toyota, Honda, Nissan, BMW, Daimler, Hyundai, and Volkswagen. Legacy car manufacturers already have the most efficient methods in place to mass produce vehicles, distribution channels to sell, deliver and service consumer vehicles over their full product life cycles, and lots of deeply experienced personnel. So what are the problems impeding these businesses from reclaiming the leader position in the EV market? The biggest problem is human labor. And it iterates itself in the form of an obstacle to transforming the workforce to build and service EVs. The fact is, the United Auto Workers Union personnel are fully competent in servicing combustion engine vehicles. They're not fully competent in servicing, presently, electric vehicles. The cost of transitioning that labor force over to competence in EVs is a big hurdle. The September 23, 2020 story published on the Center for American Progress is but one of probably hundreds on the topic of the resistance of automotive workers to switch from working on cars powered by internal combustion engines to cars powered by electric motors. Detroit car manufacturers are all unionized. Since 2019, auto workers' unions have bucked up against the switch to EVs. Notice the bottom bullet in the screen scrape just shown in this video. Quote, electric cars require fewer parts, workers, and time to build, end of quote. The combination of these three characteristics of EVs spell threat to these unions, and probably with good reason. And it should be noted that the resurrection of GM as a company, General Motors, after its bankruptcy filing was based upon leveraging the auto union to support the reemergence of the business. Without the United Auto Workers Union, there wouldn't be a modern GM. And you can see it since the writing of this script. GM has made a big announcement which has propelled its stock price back up to its price post-resurrection as a business, based around a story about GM winning a contract to build all electric vans and vehicles for FedEx, but not under the name GM. It's under a different company name. So in considering why the management chose a different company name, I found it inescapable to conclude that there was some acknowledgement of the Auto Workers Union, the combustion engine workforce, in that move to differentiate the two companies. Notice the bottom bullet in the screen scrape. And as I've said, that combination of those three characteristics of EVs spell threat to these unions, and probably with good reason. The CNBC story headline just shown dates back to 2019, but the tensions between auto workers' unions and the car dealerships built to be staffed by these workers continues to this day. As I reported in a recent video, 150 dealers selling GM's Cadillac brand of cars have refused to pay the $200,000 required of each of them to transform their dealerships to sell GM's coming Cadillac EVs. And as if the prospect of a Cadillac EV on the market, all EV in production and available for consumers to purchase, wasn't far enough out, announcement just came of a flying Cadillac to be announced at the CES show this year, which has gone virtual. Despite the pushback of auto workers and dealers, though, Detroit's shift to EVs is inevitable. GM will move more models into production by 2023. Volkswagen is moving at even a faster pace with an ID.3 and an ID.4 on the market. The Inside EV's website reports, quote, almost 1 in 10 cars sold in Europe, end of quote, as recently as November 2020 were pure EVs. The most popular EV models are the Renault Zoe and the Volkswagen ID.3. And it should be noted, Renault just signed a deal with Plug Power, a hydrogen fuel cell business. So Renault might be looking beyond lithium battery power to hydrogen at some point in the future, near future. Tesla is not leading this contest. Elon Musk himself may be aware of the inevitability Detroit will overtake his business. The Detroit Business Bureau website is but one of several running a recent story on the topic of Elon Musk's openness to merge with the Detroit company. What's the takeaway for investors? The enormous run-up in Tesla's stock price and the recent spurt higher for Apple shares may be short-lived. It may be time soon to take some profits. And at the same time, if Tesla would like to see this move go further, investors should be asking why Tesla management is not converting the enormous increase in the stock price into a vehicle they can use to acquire other businesses based upon all-stock acquisitions, as opposed to just continuing to let this run up, potentially buying back their own shares, etc. It would be much better to see Tesla acquire to grow bigger. My name is Ira Michael Blonder. I regularly follow news in the EV and AV markets. I'm also the CEO and founder of IMB Enterprises Inc. I should disclose I do have positions in hydrogen power as well as the EV market. I'm also the CEO and founder of IMB Enterprises Inc., an advisory firm focused on the enterprise software business. Please visit our website, https://www.imbeenterprises.com, and my personal Twitter page @MikeTheBebop. Speak with you next week.